Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Thursday, June 21st, 2018, and this is the daily report for gold and silver. Nominal changes in terms of the closes for both gold and silver, but it's the lows that we want to focus on today. We'll do that during our technical studies. Gold closing at $1269.80, just about $1 below yesterday's close. Silver, $1632, again about a 4-cent difference between yesterday and today. And the dollar index did lose some ground after trading to a new high, down 16 points at 94.55. Trade war concerns continued to weigh upon U.S. equities, down 196 points in terms of the Dow, 24,461, and little change in Bitcoin futures with about a $15 difference at 67.20. Now, for the fifth consecutive day, gold prices have closed lower than they're open. And of course, that all began with the tumultuous sell-off that occurred on Friday, taking gold pricing roughly $26 lower as it fell from grace, starting at approximately $13.06 and finishing off at about $12.79. That was followed by trading this week in which each day resulted in a red candle, in other words, a lower close when we pair that to the open. Today's selling pressure did result in a red candle, although the open and close are basically forming a doji. What is most noteworthy about today's activity is the low, because intraday, the market broke below what we believe to be a critical level of support, which sits at 1267.20, and that is the 0.78% retracement. And that, of course, is a retracement of the move from the lows in December up to the apex or the highs at 1370. What is most noteworthy is we saw tremendous dollar strength at the beginning of the day, and the dollar closed lower after trading above a critical resistance level. And the resistance level that I'm speaking about in the US dollar begins at roughly 94.68 and ends at around 9,500. You can see these two tops here, as well as this top here. This, of course, being a very, very long-term data set, which goes back to 2014. Of course, we've got to uncompress this chart to really make sense of this resistance level. And when we do, we can see that the price point of 95 on the dollar index has been a key and critical level of resistance, not only back in December and November of last year, but also one stab that came in about mid-May and these current tops here. So while it is quite clear that today's high traded dramatically and substantially above not only recent highs, but a critical level of resistance, the fact of the matter is that, as in former attempts, the market closed well below that particular price point, really indicating the strength of the technical resistance area found at 95. So the real question becomes whether or not the fundamentals at play will continue to result in a stronger US dollar. And if that is the case, there will be a point in which the dollar index trades and breaks above current resistance at 95, because a break and close above could signal the dollar index moving as high as 98, which is the 0.23 retracement level from that long data set. And that, of course, is going to be the key as to the future direction of gold, because gold is under pressure much in the same way that we're seeing dollar strength. And the fact of the matter is, we are also at a pretty critical level, this level of 1267. And just as in the case of the dollar, where the dollar traded above resistance but closed below, we have gold trading below support but closing back above that. So the next couple of days are going to be extremely telling in terms of giving us the information as to whether or not we are going to see a further decline in gold pricing, or if by some chance it will manage to find support at the 0.78% retracement area and then begin to trade higher. The key as to where gold could be trading at a month from now is all going to be dollar-based. If we see a 3% gain in terms of dollar strength, we are going to see a 3% drop in current gold pricing. And traders, a 3% decline in gold pricing from its current area would take gold prices roughly to $1,235 per ounce and actually challenge the lows achieved in December of last year. Traders, on a technical basis, we are certainly at a critical point. The lows that came in intraday in gold, coupled with the highs that came in the dollar, broke above resistance and below support. Although both markets, gold closing above support and the dollar closing below resistance, are really letting us know that this area is a critical area violated on a closing basis. It's going to be important to determine where the dollar goes to search for a future direction of gold, and whether or not the dollar breaks and closes above 95 is really the key factor that we need to focus upon. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.